Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is April 11th, Tuesday. We are going to take a look at a grocery store, Kroger. Let's jump right in the video. So Kroger, you may be aware of them. It is one of the stores that me and my wife shop at. It's where we get our groceries, or a lot of our groceries. And it's not just Kroger. They have a lot of other subsidies or different names for companies that they own, right? Goebbels, Fry's, Fred Meyer, Foods Company, Food for Less, Dillon's, Home Chef, JC, King Soopers, obviously Kroger Personal Finance looks like, Mariano's, Metro Market, Payless, Pick and Save, QFC. So you can see here on the left all of the different places that are under the Kroger umbrella. And the history of Kroger. Our story began in 1883 when Barney Kroger invested his life savings of $372 to open a single grocery store at 66 Pearl Street in downtown Cincinnati. He had a simple motto: be particular, never sell anything you would not want yourself. Nearly 140 years later, that's right, 140 years later, another one that has weathered the storms, right? The Great Depression, multiple wars, multiple downturns in the economy. So they've made it out. All of those previous ones, I'm sure they're going to make it out the other side of this one. As the nation's largest grocer with nearly 2,800 stores in 35 states operating under 28 different names. Here's again all the different names that they operate under. We meet our customers' changing needs by making fresh food accessible to all. Our current practices are rooted in Barney Kroger's early efforts to serve customers through food, freshness, low prices, and innovation, fundamentals that remain at the heart of the Kroger mission today. This is a story of all people in our history who helped change the way we shop, people who continue to make a difference in the lives of our customers every day. So that's a little overview. If you want to know more about them, www.kroger.com. That is their homepage where I pulled this information from. And the reason we are looking at them, we are talking about the Kroger company, ticker KR, out of the consumer staples sector. They were down 1.93% on the day. And on a day where there was a lot of green, this is one that was down the most. Closed the day at $47.96. Average volume of 5.534 million. Today was 5.899. And as you can see, big drop off in the morning there, and then pretty much steady throughout the day. Just a sell off for most of the morning, and then kind of ran flat throughout the rest of the day. A market cap of $34.406 billion, a beta of 0.47. So this one is less volatile than the overall market, about half as volatile. Actually, that's what beta means. It's the volatility of the market. A 1 being the market, right? That's flat. Anything above a 1 means more volatile. Anything below 1 is less volatile. This one is less volatile. Price to earnings, PE ratio is 15.67, so that is very nice to see. $15.67 is the price you pay for a dollar of their earnings. That's what PE means. Earnings per share, EPS, what you're paying for their earnings, or what you're getting in earnings per share, $3.06 per share. So that's nice to see. Earnings date, somewhere between June 14th to June 19th is their next one. Forward dividend is $1.04 paid out on the year. Divide that by 4. We'll see that here in a minute, what they pay quarterly. Dividend yield is not the greatest, 2.13. So this is another one I'd want to see double-digit dividend growth, and we'll see if we see that here in a moment as well. And the last ex-dividend date, or actually the next one coming up, is on May 12th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information. I am not affiliated, just one of the sources I like to go to for information. They have a 1-year target of $52.16, so it does speak to some potential upside appreciation in the stock price. Now, I always say get in and look at more of the financials of the company. So you want to look at statistics, you want to look at their financials. Going to statistics, one of the things I like to look at is dividend yield theory. So that you find that under statistics down at the bottom, and you'd look at their 5-year average dividend yield, which is 1.97, compare it to their current or the forward dividend yield, right? 2.13. And if the 5-year average is less than the current dividend yield, or another way to say it, if the current or forward dividend yield is higher than the 5-year average, then it speaks to some undervaluation, right? Potential undervaluation here. That's what we're seeing. If this forward annual dividend yield or current dividend yield was lower than 1.97, it would speak to some overvaluation, right? That's what you're looking at for that. So this one is potentially slightly undervalued, right? And another one I like to look at is financials. You can see a lot of information there. Their debt, their debt to equity, right? So you can see all that information. Free cash flow, are they repurchasing stock? Those are two that I like to pull out and take a look at. The free cash flow is what the dividends are paid out of, so you want to see this growing over time. So in 2020, it was 1.5 billion. In 2021, it's 3.9. Big jump up in 2021. A little bit of a drop off here in 2022, and so far in 2023, even though we're not really through the year. So that's kind of, I would say from 21 to 22, that's pretty much flat, but it is growing from 20 to 2021, and hopefully we'll see some growth here in 2022 throughout 2023. Obviously, we're in the middle of 2023 just through the first quarter. So if it continues on that track, we would see some potential growth here through the year. So I would say growing free cash flow overall, and they are repurchasing stock, right? You can see that repurchase of shares over time. That's another thing that we like to see. You don't want shares being diluted, which means they're adding more, which means you own less and less and less and less of the business as they add more in shares. You want to see just the opposite, where they're buying back shares or at least keeping them the same so that you own more of the business over time. Or your share increases whenever you buy more or stays the same if you don't, right? Now, I always recommend more than one source. So another one that I like is stockanalysis.com. I'm not affiliated with them either, just another source of information, right? But I always recommend going to more than one so you can back check the information and make sure that it's accurate. You're not, one site might say it's at $47, $47.95. One might say it's at $46. What is it really? One might say that their free cash flow is one thing, one says another. So 2 to 3 sources, at least 2. Just make sure the information that you are getting is accurate. That's the idea here. 32 stock analysts have taken a look at it from stockanalysis.com, and they call it a consensus buy. Now, they have a low estimate of $36.36. This would be close to their 52-week low that we saw on the previous page at $47.95. It's quite a bit above that, right? And that would be a 24.17% decrease in the stock price from where it currently sits. Its average estimate of $53.20. That's pretty close to what we saw as Yahoo Finance's average or cost basis in the previous slide. So that would be a 10.95% increase in the stock price. And if it happened to hit their high estimate of $78.75, that would be a 64.23% increase in the stock price. All the while you'd be collecting that 2+% dividend yield if you bought them now. Obviously, if you waited for them to drop down a little bit more, if they pulled back closer to the 36, you would have a higher yield. Now, this is where I show you my position if I had one. I do not have one in Kroger. I did own them at one time. I bought them in the low 30s, sold them in the mid to high 40s. Feel that they are probably a little overvalued, or at least a little over where I want to pick them up now. I'm looking for a pullback. This is one that I am watching. I'd love them to get down into the low 40 ranges or even back into the 30s, and I would scoop up a bunch of them. But they do have a very low payout ratio of 30.3%, so that's nice to see, and very fast dividend growth, 22.22%. They pay 26 cents per share. They do pay out quarterly. You can see they're on that February, May, August, November payout, and it looks like their last raise was in May, so we may see that next dividend payout be a little bit more than this one, or I would expect at least sometime this year they have another dividend raise. All right, that is it. That is Kroger. In my opinion, they are getting closer to a buy. Not quite there yet, but one I am watching. Would love to add this back into my position here. Kroger, like I said, down in the low 40s, high 30s would be ideal, but a little bit more of a pullback, and it'll be right in my wheelhouse. Well, as always, appreciate you stopping by. If you haven't already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, hit that subscribe button. Join me on this journey to financial freedom. If you don't have your own brokerage account, I do have a Webull link down below. If you use that link to sign up for your brokerage account, put some money in that account, start trading today, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. Another way to help out the channel, like I said, hitting that thumbs up, ringing that notification bell, hitting that subscribe button, sharing with anyone you think that might find value in the content, and dropping a comment. Let me know what you think of Kroger. Let me know what you think of the video. I do personally read and respond to the comments on the day I post a video. And for those of you who are responding to older videos and I'm not responding, apologies. It's not that I'm ignoring you. I do have a day job. This is just a hobby. I do not make any money from YouTube. You have to have at least 1,000 subscribers. So help me get there by hitting that subscribe button down below. That really does help out a small YouTube channel like me. And like I said, drop a comment as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. The investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest in any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. A tip for those of you who stayed this long: this is what I look at for my overall investing criteria. There are a couple others, but if it met these, 4 out of 6 or 5 out of 7, if it was a financial company, it would be on the verge of investable. I would look at a couple other things to make sure that the finances are in order, like their debt and that sort of thing. But overall, these are the high notes. See you.